Good evening, everyone. This is Ahmed Youssef from Immigrant Services Calgary. This evening, Dr. Hani Saman will present about insurance for individuals. Last week, we had a session about insurance in Canada, an overview. Dr. Hani told us about the different types of insurance and many important things to consider when choosing the right insurance for ourselves, depending on our job, our age, what we own, and our future plans. Today, Dr. Hani is introducing, as I mentioned, about different types of individual insurance or life insurance. Before I start, I have some very few uh, things to mention about housekeeping. Today, our presentation is funded by the Government of Canada. So we thank the Government of Canada, IRCC, for funding the programs at Immigrant Services Calgary. Also, I would like to thank Dr. Hani Saman for donating his time, expertise, and coming and trying to help the community, especially newcomers, to learn more about Canada to be successful in their integration and their settlement. In addition to that, and finally, I would like to thank the First Nations for signing treaties in Alberta, especially Treaty 7 and Region number 3 in Southern Alberta, for allowing the peaceful integration and living between old immigrants and new immigrants. Without a lot of wait, I would like to invite Dr. Hani Saman to introduce about tonight's topic. Go ahead, Dr. Hani.
Hi, hello everyone. Thank you for having me tonight. Actually, this is our second session about the insurance in Canada. Before I start, I want to thank Ahmed and thank Ella and thank everyone who helped us for the technical support. Last time we talked about a general overview about the insurance in Canada. We talked about the personal insurance or the individual in general. We talked about the property insurance. Today is our second session. We will start to talk about the insurance, the personal or the individual insurance in specific details. We will talk about each one of the insurance and how it works. Before we start, I want to quickly mention about some topics we talked about last time, which is very important about the insurance. First, what is insurance? Insurance, we will try to make it very simple to everyone. Insurance is some type of compensation. The insurance company promises to compensate if one of the risks happen. The risk, a sudden risk. For example, someone lost his car, someone has injured and he cannot work. So this is the event, this is the risk happen. So the insurance company give promise to pay for or to compensate for this event. This promise is the insurance contract. This is the insurance policy, what we have. This is the first one. Second, why insurance? Why everyone should have insurance? Actually, insurance is very important for everyone. As I mentioned, first, insurance is a type of compensation. If I lost my car, I'm injured, I can't work, so the insurance will compensate me for this one. Second, it's a type of debts. If I have debts, like I'm buying a car right now, I'm financing the car. I lost my car, and I have to pay for the rest of the payment. So the insurance company will give me or will compensate me, will pay me the insurance amount. I will pay back to the bank or to the wherever I'm financing the car from. Today, we will start to talk about the individual or the personal insurance. And last time I told you, I have my own classification. We can divide the insurance into human insurance or insurance dealing with humans and the human insurance, which deals with the car, house, and business, all this stuff. First one is the life insurance. So life insurance means we have someone who will have a contract with the insurance company. The insurance company promise if something happened to this person, if this person will lose his life, the insurance company will pay for the beneficiary, for his family, or we will talk about the beneficiary later, like after a few minutes. So the insurance, the first one is the life insurance company. It is very important for most of the families. The first type of the life insurance is called the term insurance. Term insurance means it has a specific limited period. So it may be like 5 years, 10 years, 15, 20, it's up to 30 years old years. So this is the insurance, the term life insurance. Term life insurance has some benefits, have some advantage and disadvantage. The first one, the advantage, the first advantage is the premium, like the premium is the monthly payment. Like everyone, when we have this contract, he will pay the premium, the monthly payment for the insurance company. So the term life insurance has a very lower premium. So the premium is affordable to anyone. Second, the coverage is high. We can have the coverage. When I say coverage, I mean the amount of the insurance that will be paid if something happened. So the first one, the premium is low, the coverage is high. I can choose from 100,000 up to some millions. This is the coverage of the term insurance. The second one will give us more flexibility to choose what coverage can we have. So this is the benefit or the advantage of the term life insurance. The only disadvantage of the term life insurance is after the specific period, the term, after 20 years, after 30 years, when the insurance that is done, like there is no other term in the insurance policy, we call it the maturation or the end of the policy. So the policy will collapse, it will be canceled, no other payment needed, and no coverage will be offered to the client. So this is the first one, the term life insurance. Second question about the term life insurance is who are the beneficiary? Who can be the beneficiary? Beneficiary means the person who will take the benefit from the life insurance. If something happened to the husband, the beneficiary can be his wife, his children, his parents, one of the family members. It also can be the business owner. If he's working in his, or if he owns a business, he can be his partner in business. So he should have like what we call it the insurable interest. He should have an insurable interest. Now, what can affect the premium of the insurance, the term life insurance? Term life insurance, when I go to the insurance company and ask for a policy or asking for some code, some numbers for the insurance premium, there is some specific factors which will affect the insurance premium. First, the age. The younger you are, the lower premium you will pay. So age, number one. Number two, the health status. If someone has a health issue, especially the diabetic person, they will pay more premium. And it depends on the underwriting. We will talk about the underwriting. The insurance company will decide how much will be the premium depending on the medical checkup or the letter, or we call it the attending physician statement. It's a statement. The insurance company will send it to the family doctor. He will give some information about the health status of the client and send it back to the insurance company. First one, the age. Second one, the medical or the health issues. Number three is the gender. Female always and always will pay less for the life insurance. According to some statistics, some medical facts, the female, they have higher life expectancy, so they will pay less for the life insurance. This is the second one. The second type of life insurance, it's called the all life or no term or continuous insurance. It's the whole life insurance. That means it is insurance policy will start with the client when he signed the application and they get the approval for the policy, and will continue with the client until he decide to cancel the policy or is something happened to him. The whole life policy, it has much more advantage than the other one, the term insurance, but it also has some disadvantage. It is two types. One of them is called the whole life and the other one is called the universal life insurance. They are almost the same except for one point, and I will mention right away. The universal and the whole life, they give the client life insurance protection, like the term life insurance exactly. The second one, it gives the client some investment. So I will pay each month for the premium or I can pay annually, like I can pay one payment each year, or I can pay every month. The first will give us the coverage, the life insurance coverage. The second one will give us the investment. The money I will put in the policy will be invested through the insurance company, and after a specific period of time or at the end of the policy, I can get my money back with the investment. This is a great benefit for the whole life insurance. Plus, it has some taxation benefit. We will talk about the taxation benefit with the business insurance, but this policy, the whole life policy, can give us some benefit, taxation benefit. What is the difference between the whole life and the universal insurance? The only difference, in a very simple words, that the whole life, the insurance company will invest my money. When I put some money in this policy, the insurance company will take care of the investment. In the universal insurance policy, I have to take care of my own investment. I will do the investment for myself. It's a complicated process. It needs some details, but for now, this is more than enough to know that the whole life, you will give the money to the insurance company, they will invest it for you. For the universal, you will take care of your own investment. The second benefit of the insurance, of the whole life insurance, it can be paid by personal account, personally, or through a corporation. If you have a corporation, you have a business, you have your own corporation, you can pay it through your corporation. So the benefits of the whole life, it gives me life coverage, it gives me investment, it gives me taxation benefit, and finally, it can be paid by the corporation or personally. The only disadvantage of this policy is that the coverage, the life insurance coverage is not as high as the term life insurance. This is the first problem about the whole life insurance. Now, what about the steps? Now I'm thinking to buy a life insurance to protect my family or to protect my business. What are the steps? The first step, I will contact my insurance agent or insurance company. I will ask about the insurance, the life insurance policy. After a discussion, he will ask me some questions, and now we can determine, or we can detect together, how much insurance coverage do I need. This is the first step. The second step, I will fill an application. It's like 20 page. It's a lot of paperwork, but it's the insurance broker, the insurance agent will fill it for me. We will fill it together. Then I will sign the application. This application will continue all the main information about myself, like about the name, date of birth, place of birth, which country, my everything about my work, about my family doctor, about my health status. That's everything. So I will sign the application. The insurance broker will send it to the insurance company. The insurance company may ask for a medical checkup. It's a complete medical checkup that will be done through a third-party company. It's not through Alberta Health Services, not through the insurance company. It is through a specific independent medical company. They will do a complete medical checkup, and the payment for this company will be paid by the insurance company, not by the client. Or the insurance company can void this medical checkup and just send a letter, or what we call it, attending physician statement. It's a split statement, will be sent to the physician. The family doctor will sign it, give all the information, send it back to the insurance company. For now, this is the first steps. After the medical checkup will be done, or after the doctor will send the statement to the insurance company, after a few weeks, the insurance company will give the approval for the insurance policy. It will send it to the broker or the insurance agent, and he will deliver it to the client. Now the person is covered totally from the life insurance point of view. This is the steps for the life insurance, and the same steps we will use it for all the other types of insurance. After you get the policy, the insurance company will start to withdraw the premium. Will take the premium monthly or annually. It depends on the policy. I will move now to the next type of insurance, but if someone has any question, I can answer it before.
Our guest, do you have any questions about the first part? Term insurance, life, the universal and the regular life insurance. Do you have any questions about this part? Because we have a lot of information.
Okay.
I guess someone is using his mic here.
Okay, sure, yeah.
Oh, no, I don't have any question.
Okay, thank you so much.
Okay. The second or the next type of insurance, it's called the critical illness insurance. Critical illness insurance, what that means? If someone has a specific disease, there is a list of the diseases. If someone get a disease from this list and he cannot work for a specific period of time, like 2 weeks, 3 weeks, whatever the period will be, and he will return back to work, the insurance company will pay the client the amount of the coverage, which is a lump sum. Just one payment can be 50,000, 100,000, 200,000. It depends on the policy itself. So the critical is, and he cannot work for few days up to few weeks, then he will go back to work, and the insurance company will pay the whole amount of the coverage. These diseases, it's different. There is a difference from one company to another company, insurance company. Most of the companies, they cover only four diseases, which are cancers, blood diseases, stroke, and heart attacks. These are the four main diseases. Some other companies, they cover more big list of diseases, a wide range of diseases, which are like it's a very big list. They will cover the like the multiple sclerosis, the kidney disease, liver disease, lung disease, blindness, loss of a limb. It's a big list. They are about 30 diseases. So the steps for this policy will be exactly the same as the life insurance. We will find the client will fill the application, will send it to the insurance company. They will order a medical checkup or statement from the physician, and then they give the approval. The only thing about this one, there is a very unique product in the market right now. It's called the critical illness with return of premium. That means if the client get the policy and will pay for the premium for the whole period of the policy, at the end of the policy, he didn't do any claim, everything is okay, he can get his money back, the whole amount. So this is called the critical illness with return of premium, and it's a new product in the market. For the it's a not like it has been announced in the market for like 4 years now, and this is the only product that has the return of premium option. The third type of insurance, it's called the disability insurance, and we have to know the difference between the critical illness and disability. In the critical illness, we said that the insured, the person will get a disease, cannot work for a specific period of time, and then he will go back to work, and he will get the money anyway if he go to work or no, as soon as he is diagnosed with one of the lists that we mentioned before. But for the disability, the client will get the insurance coverage if something happened to him and he cannot go to work anymore. And the coverage is a monthly coverage, a monthly payment. That means the insurance company will not pay him a lump sum, will not pay him a big amount of money. The insurance company will pay the client a monthly payment from day one he is disabled until the end of the policy, that is age 65. So the insurance company will pay the client a specific amount of money every month, which is the insurance coverage, and there is a maximum for this amount. The maximum is 80% of his personal income. That means if someone is working and his monthly income is 1,000, if something happened to him, the insurance company will pay him $800 each month till the age of 65. If his income is 10,000, the insurance company will pay him 8,000 each month until the age of 65. This is the maximum, but the client can choose a lower coverage. Like someone, his income is 1,000, but he can choose to get a benefit of $200 or $300 a month, because of course it will decrease the premium, the monthly payment that he will pay for the insurance company. There is something I want to mention about this disability insurance. There is two types of the disability. It's called the on job or any job. If someone, he cannot work anymore, but he cannot do his own job, but he can work another job, this is what's called any job. The other one is on job, that is specifically about his own job, like a dentist or a surgeon. He cannot, something happened to his hand, he cannot use his hand anymore, he cannot work as a dentist or as a surgeon, but he can work any other job. He can work like an office work. So this is specifically talk about his own job. The disability insurance, it's a kind of hard insurance to get. Like the client, when he apply for the insurance, for disability insurance, the underwriting, the insurance company will do a lots of investigations, a lots of medical checkup, even more than the life and the critical illness insurance to give the client the approval for the disability insurance. The disability insurance, the only problem about the disability insurance is the premium is a little bit higher than the critical illness and the life insurance. The next type of insurance is the health benefit insurance. As you know, here in Alberta, the Alberta Insurance Count, the Alberta Health Services is covering most of the medical service, like doctor visit, emergency visits, any procedure, like most of the operations, the annual checkup, the regular annual checkup is covered under the Alberta Health Services, but there is some other services that cannot be, which are not covered by the Alberta Health Service, like the medication. If you went to your doctor and he prescribed you some medication, you will go and pay for it, unless you are working with some company or has like a specific type of insurance. The insurance, the health benefit insurance will cover this medication. If you go to a dentist, the dental visit is not covered under Alberta Insurance, Alberta Health Services. The optometrist, if you go to the optometrist, it is not covered. So some people need to have this type of insurance to cover the medication, the dental, and the optical visits. You can get this type of insurance through a specific insurance company. You will pay premium every month, and if something happened, if you went to your doctor, you get a prescription, you can go, and you will not pay for the medication, or you will pay like some of it, not all of the cost. You can have it as a family, like individually, or you can have it as a company. If you have a business, you have a corporation, you can have it for your employees or for your family even. This type of insurance, the health benefit insurance, there is a subtype of this insurance. It's called the health spending account. If you are like two persons, like me and my wife, want to have this type of insurance, and the premium is high for us, we can have this type. We can have the subtype, which is called the health spending account. I will pay for this medication, I will pay for the dental visit, but I can claim it through my taxes. This is the most important about the health benefit. The next type is called the travel insurance. Travel insurance, that means someone is going to travel. He can travel from Canada outside to visit anywhere else, like going to the States, to Europe, to the Middle East, to the Far East. This is when someone going from Canada to outside, or if someone is coming to Canada. If you have a family member will come and visit you here in Canada, he will not have an insurance coverage, a medical insurance coverage. He will not be covered under the Alberta Health Services. So if he needs to go to see a physician, or something happen and he go to the emergency and get any investigation, you will pay a lot. He will pay a lot for this service. But if he has this kind of insurance, the travel insurance, he will be covered under this policy up to a specific limit. For the Canadians who are going outside of Canada, the coverage is $10 million, and the payment is a very tiny amount. Like you can have $10 million. If you're going for a trip for 1 week or 2 weeks, you will pay like $60 for a coverage of $10 million. For the visitors to Canada, it's higher than this amount. The visitor will pay like $100 each month for every month for a coverage of 50,000 or above. And it also we can control the amount. We can have a higher coverage, we can have a lower coverage. It depends on the premium, how much you want to pay for this kind of insurance. Some of the insurance company for the travel insurance, they can cover also if something happened to the flight, if the flight is canceled, for the cancellation of the flight, they will pay if you lost your luggages. So, but most of the companies, they will cover only the emergency medical stuff, like if something happened, if you need to go to the emergency, go to the doctor, you need a medication, it will be covered under the travel insurance policy. And this is very important if you have any visitors coming to visit you from outside of Canada. It's a very, very important policy. One of my friends, he has some of the family members came to Canada a few months ago, and she needs to go to the emergency, and she did she did 2 investigations in the emergency, and they sent him a bill, the invoice of $3,200. But he was so lucky, he just got the insurance, the travel insurance policy a few days before this event happened. The last type of insurance is the business insurance. The business insurance is the insurance related to business, but will cover the human being. Like if I am owning a business, I have some employees, I have a manager for my business, I can have an insurance policy, a life insurance or critical illness or disability insurance covering this person. I will be the owner of the policy. I will buy this policy for myself. I'm the owner, but the insured, the person that will be insured is the manager of the business. Because if something happened to him, I cannot manage, I cannot take care of my business. So he's taking care of everything. That person, if something happened to him, the insurance company will pay me the amount of money. The second one is they call the whole life business insurance, which we call it the Wealth Achiever. It's a specific policy for the business owners. They can have it for any employee or for themselves. They will have the taxation benefit, they will have the life insurance coverage benefit, and they will have investment for their money. This policy specifically can save up to 30% of the taxes they will pay. So this one is very important for the business owners. This is most of the information about the individual or the human insurance policies. I have some questions here. Someone sent me some question, but I will start first. If anyone has a question, I will answer it first, and then we will answer the other questions here.
Okay, our guests, do we have any questions here? Doctor, go ahead. I don't see anyone.
Okay. I have some questions. The first one is, when should I have insurance? It's a very good question, actually. What is the perfect time to have insurance? As I mentioned, the younger you are, the lower the premium you will pay for any type of insurance. For life insurance, let's say someone applied for the life insurance, the term life insurance. He is 30 years old, and he's asking for a coverage of 500,000, $500,000. He can pay between $30 and $40 a month. If he's 40 years old, he can pay 60 or 70. If he's 50 or 60, he can pay 100 or 120. So the younger you are, the lower the premium you will pay. The second is the perfect time is when I need the insurance. Like if I'm going to buy a house, or I already bought a house, I need to protect my family against any event that can happen to me. Like if something happened to me, I have to think who will pay for the mortgage. So the insurance now is very important. I need to pay the mortgage. The insurance company will pay the mortgage for my family if something happened to me, and so on. So when I have a new event, like I'm going to open a new business, I have to have an insurance that will cover my life. It will cover my life. If something happened, they will pay for the loan, the business loan. They will pay for the mortgage. If I'm having a mortgage with the bank, they will have for the business expenses. So this is the first one. If I have a new family, someone if someone will get married and he will have a new family, he should have an insurance to protect his family. So this is the answer about when should I have the insurance. The second question is, which company? There's like hundreds of companies in Canada here, insurance companies. Which company? First, I should choose the company depending on the reputation of the company. Like if I'm familiar with the name of the company, if some of my friends already has business with this company, that will make me have more comfortable to deal with this company. Plus, you can discuss this issue with your insurance broker or insurance agent, because from every now and then the insurance companies offer good deals. You can, if you want to apply for the insurance, term life insurance right now, you can like search which company has a good offer right now. You can get a discount, or you can get like a bonus. Like right now, there is one of the insurance company is offering 5 months free for the term life insurance. This is a very good deal. Last year, same time, we had another insurance company who offered 20% discount on the life insurance, the term life insurance. So it depends on the time, and it depends on the experience of you, your friends, your neighbors, your family, and of course it will depend on the discussion between you and the insurance broker. Oh, third question, we answered this question. What will affect my insurance premium? If I'm going to have an insurance and I will pay premium for this insurance, what will affect? The premium for the insurance, for the individual insurance, it's totally different from the premium for the home and auto, like the car and the house insurance. We will talk about in the next session, but today we're talking about the life insurance. The most important factor that will affect the insurance premium, number one, the age. Age is very important. Second is the medical history, the medical status. Like if someone, the most important two factors affecting the premium is the smoking status. A smoker will pay triple the amount of any other individual, any other person. If two persons, same age exactly, same medical history exactly, this everything is the same, but one of them is a smoker, he will pay triple. If that one will pay $50, the other one will pay about $150. So smoking is very important. The diabetes, it will affect, but not that much. The other medical history will affect the premium depending on the investigations, depending on the underwriting about the if someone has a diabetes and he's controlled, the diabetes is controlled, he's taking his medication, the all the blood sugar level are normal all the time, is normal all the time, that will make a very slight difference in the premium, like it will affect it a very a minimal increase in the premium. On the other hand, if you have high blood pressure and it is not controlled, for sure it will affect the premium and the premium will increase. But if someone has a high blood pressure or diabetic, is a diabetic and is applying for an insurance and his blood glucose level is not controlled, and the insurance company will pay him, will rate him, will give him a higher rate. After 1 year, if everything is controlled, if the blood sugar is controlled, he's taking his medication on time, everything is okay, we can send to the insurance company to consider the new status and they can lower the premium in the next year. So this is the second factor. The third factor, we talked about male and female. Female will pay less for the life insurance, but female will pay higher for the critical illness. This is depending on medical statistics and medical researches. So the life insurance for the female will be higher, but the will be lower premium for the life insurance, but for the critical illness, the female will pay higher. For the disability, they are almost the same, equally the same. And the last one is the amount, the coverage of the amount of the coverage. If I'm applying for 500,000, I will pay less than anyone who is applying for 1 million coverage. So the amount, the coverage will make a difference in the insurance premium. The second one is, can anyone have insurance, like get approved, regardless of his health and financial status? Of course not. If anyone apply, if I will apply for the insurance, for the term life insurance now, the insurance company will do the underwriting, the investigations, and then they will decide if they will approve me to have the insurance or they will decline the policy. It depends on the medical checkup and financial status. That means if someone he cannot pay for the premium, that means the insurance company, they will not decline it, but they will postpone it until he can pay for the premium. But for the medical history, for the medical status, some persons will be declined from the insurance company. But they can apply in another company because the risk factors, some insurance companies will take risks higher than the other company. So if I get declined from one of the companies, I can reapply in another company, but this is not guaranteed he will get the policy. We can try, like we can try to apply a second time, but he may get the approval with a higher premium, or he can be declined from the other company. Okay, this is the last one.
Dr. Hani, I have some questions here in the chat box, if you would like me to read them for you.
Yes, please.
So one of them is overlapping with our topic for next time, but I guess it might be useful if we mention the answer here. Someone says, when we plan for a mortgage, they suggest having a mortgage insurance. Is it better than life insurance? This is question number one.
Okay,
Question
great.
number two, if I have a family member coming to visit me here in Canada,
Yeah.
where to buy the insurance, the travel insurance? Is it better to buy it from Canada or buy it from back home?
Okay. Okay. Great. Two great questions actually. The first one is the difference between the mortgage and the life insurance. They are exactly the same with a very little difference. When you apply for a mortgage, the bank or the mortgage company will offer you the mortgage insurance. The difference is, if you apply for a mortgage insurance, the coverage will be just the amount of the mortgage, the balance of the mortgage actually. So if you apply for, you get a mortgage of 500,000 and you apply today for the mortgage insurance, so the coverage will start with 500,000. After 10 years, the balance of the mortgage is 200,000, so the coverage will be 200. So the coverage is declining. Each year will decrease until the end of the mortgage. There is no coverage for the life insurance. This is the mortgage insurance. Plus, the beneficiary will be the bank, not your family. So if the insurance company has to pay the coverage, they will pay directly to the bank or to the mortgage company. Plus, the coverage will decline by the time. And finally, the premium is higher than the regular life insurance. So from my experience, and usually actually I don't, I don't offer this mortgage to my clients at all, because I don't believe in mortgage insurance. It's like, why should I have this kind of insurance? Should I have the mortgage insurance, which the coverage will decline, will decrease by the time. On the same time, I can have a life insurance. The coverage will start with 500,000 till the end of the policy. It is 500,000, will not decrease at all. Plus, my family will be the beneficiary for the life insurance. If something happened to me, they can get the mortgage, the coverage, the insurance, and they have the right to pay for the mortgage or to keep the money and pay the monthly payment for the mortgage. So it's very important to know the difference between mortgage insurance and life insurance. In my opinion, never ever have the mortgage insurance. Even if the bank will offer you, no, just get your life insurance policy from anywhere else, and just let the bank know that I have my own life insurance. That's it. You don't need to have it. For the question about the visitors to Canada, actually, there is two types or two different way you can get your insurance for the visitors coming to Canada. You can buy it from back home. For sure, it will be cheap. It will be cheaper if you get it from back home. But the problem is, and from my experience, most of the time, if your visitor will need to go to the doctor or to go to the emergency, you will need to pay for the money first, and then you will claim it from the insurance company. Here in Canada, no. You will go to the doctor or the emergency, you will give them the policy number, and you will pay nothing. You will pay just the premium for the policy, and that's it. Secondly, you will pay first for the one you will buy it from back home, and most of the time, from my experience, they will not pay. They will do their best. They will negotiate with you. They will ask for too many paperwork. At the end of the day, you may get your money or a part of your money, or you will never get your money. Plus the difference, like the price, if you get it from Canada here, or if you get it from back home, any outside of Canada, the difference will not be that much. So don't take the risk. Don't pay for the insurance from outside Canada. It's very important to have this insurance here. Oh yeah, someone else have a question? Yeah, sure.
Yes, we have one more question, sir.
Yeah, sure.
Yes, Thomas, go ahead. Marco?
Yeah.
Marco, you can start your unmute yourself.
Yes, hi, how are you, Ahmed and Mr. Dr. Hani? I have a small question regarding the life insurance.
Yeah,
Is
sure.
it possible to request for a life insurance for someone who's living abroad, like in Africa or somewhere else, rather than just Canada and the USA?
You mean to buy a policy for him?
Yes, yes.
Okay. No. To buy a policy for someone in Canada, even if he's living in the United States, you can't buy an insurance for him. Yeah, this is a good question. I will mention about this one. If you want to buy an insurance policy for someone, first he should be a Canadian citizen or having a permanent resident. If he is a newcomer and he doesn't have the PR, the permanent resident, he cannot buy insurance policy. This is the first one, the first question. So you cannot buy for someone outside of Canada, even if he's in the United States. But you can put someone as a beneficiary, even he is not living in Canada. If you have someone in Africa, one of the family, your parents or your sister or your brother, you can buy an insurance policy for yourself and put your family as a beneficiary, even if they are living outside of Canada.
Okay.
This is the most important thing. Okay, another question. Is there COVID-19 insurance coverage? Okay. For the travel insurance, no. No, none of the companies is covering the COVID-19, anything related to COVID-19. That was announced like in March, last March, when the pandemic started. All the insurance companies, they announced that COVID-19 is not covered by the travel insurance, but it is covered under the life insurance policies. If I have a life insurance, someone have a life insurance and something happened to him due to COVID-19, he is covered 100%. But for the travel insurance, no.
Thank you, Dr. Hani.
Okay.
Do we have any questions from our
yeah,
guests here?
I have one last question here.
Yeah, go ahead.
Someone is asking about the travel insurance. Does travel insurance covering pregnancy and delivery? Like if she's pregnant and she coming to Canada as a visitor, so does the travel insurance covering this type of medical issue? No. This is very important question, because I had this question many times before. If someone is coming to Canada, she's pregnant and she wanna come and get her baby here in Canada, travel insurance does not cover anything related to pregnancy at all. Just if something like emergency happen, like the blood pressure go higher all of a sudden, yeah, it's covered. But anything related to like if she wanna go to see a gynecologist, obstetrician or gynecologist, if she wanna go to the hospital, anything related to delivery, including the hospital and the delivery itself, it's a totally different process. She has to go to the Alberta Health Services. There is a specific place called the Central Triage. She has to pay $15,000 deposit. It's a different story. Okay. That's it. Any other question?
I don't see any other questions here from our guests, but As usual, Dr. Hani, please, can you give us a quick summary about today's
sure.
topic? Yeah,
Sure.
please.
Okay. Yeah, today we talked about the insurance dealing with the human in general, like anything related to humans, including the life insurance, disability, anything related to the human body. The first type we talked about was the life insurance, and we mentioned that life insurance is covering if something happened to someone and this one he lost his life, so the insurance company will pay the insurance coverage amount to the family or any beneficiary, whatever the beneficiary is. So it's called the term life insurance. It has a specific limit time. It can be 10 years, 20 years, or more, up to 30 years. The maximum age to have a coverage or a life insurance is 75. If someone came to me and said, I want to have a life insurance 20 years, I will ask him, how old are you? He will say, I'm 70. No, he cannot have 20 years life insurance. The only he can have is 5 years. So the maximum, I didn't mention this information, the maximum age to have a life insurance is 75. So it will depend on the age. If someone is 30, he can have his insurance 20 years, 30, or even the whole life. But for 70, the maximum is 75. The term life insurance has some benefits and some advantage. The premium is very low. The coverage is higher compared to the other insurance types. So lower premium, higher coverage. And the only disadvantage is at the end of the term, I will not get my money back. The insurance policy will collapse, will be ended, so there is no coverage anymore. This is the first type. The second type is called the whole life insurance, or the all life. It's two types, two subtypes, whole life and universal. They are exactly the same except for the investment, because this type of insurance, you will pay premium every month or every year. This premium will be collected, will be put in your account, and the insurance company will invest it for you. But in the universal policy, you will invest it for yourself. So this policy has life insurance coverage, has investment benefits, plus it has some taxation benefits that will be very useful for the business owners, especially for the business owners. The only disadvantage is the coverage is not higher as much as the term life insurance. The second type of insurance was the critical illness. That means if someone has a disease, there is a big list of diseases, liver, kidney, heart, cancers, neuro, like multiple sclerosis, Parkinsonism, lots of diseases. If someone had this disease, the insurance company will pay the coverage as a lump sum to the client, just one big payment, if he is diagnosed with this one of these lists. The critical illness insurance in most of the companies are like the premium is not that much. It's even lower than the life insurance premium. And there is another one of the companies has a unique product now, which is the critical illness insurance with return of premium. That means if you didn't do any claim, you will get your money back. The third type of insurance is the disability. If something happened to someone and he couldn't go to work anymore, he is disabled right now, the insurance company will pay a monthly payment, a monthly benefit for this client each month till the age of 65. Exactly as if he's working, like till the age of retirement. He will retire at the 65. So the insurance company will pay each month the benefits, the coverage. This coverage has a maximum, which is 80% of the income, of the monthly or the annual income. So the client cannot get the benefit up to 80% of his income. He can lower the the benefit. He can get less benefit to pay less premium, but he cannot increase it above the 80% of the income. The disability, depending on the job, some risk jobs, they will pay a lot for this disability. Like if someone is working in the construction, or a truck driver, or someone is working in outside of the city, like in the oil and gas fields, he will pay more. Yeah, if you compare it to some other jobs like physicians, a pharmacist, accountant, like the office jobs, they will pay less because the risk is lower for these types of jobs. The critical illness and disability and life insurance, they are all taking the same steps, like all the process itself. We will go through some specific steps. You will contact your insurance agent. You will get the numbers first. The insurance agent will tell you, you need 500,000, you will pay $20 a month, $30 a month. If you agreed, and if the premium will be okay with you, you will sign the application. The application will be filled. You will fill it with the insurance agent. It will contain all the information about you, like your name, address, family history, medical history, everything. You will sign the application. It will be sent to the insurance company. Then you have two options, or they will do one of two things. First, they can order a medical checkup, a complete medical checkup. The company, the medical checkup company, it's independent company, will call you, and they will come to your house. You will not go anywhere to do the medical checkup. A nurse will come to your house. She will get a blood sample, urine sample. She will measure the blood pressure and the weight and height, and then they will send the blood sample and the urine sample to the lab. They will do everything. Like even they will do some investigation much more higher than you are doing with your family doctor. They will do what's called the tumor markers. The tumor markers is all the investigations about the cancer. They will do the tumor markers. They will do liver enzymes, kidney enzymes. They will do kidney function. They will do the thyroid, all the hormones, like everything, lipid profile, blood sugar. So after you get the result, if everything is okay, the insurance company will give the approval for the policy, or the insurance company can void this medical checkup and send a statement to your physician, which is called the attending physician statement. Your physician, your family doctor will get the statement, will fill it, answer all the questions, and send it back to the insurance company. After that, it will take like 3 to 4 weeks to get the approval. Once you get the approval, you will get the insurance, the broker will get the policy and will contact you and deliver the policy. Once you deliver, you get the policy and sign on the delivery document, you are covered right away. This process will go for the life, disability, and critical illness insurance. The second type of insurance is the travel insurance. Travel insurance, it's two types. You can say that one of them is covering the Canadians who are traveling outside of Canada, even if they are visiting the United States, Europe, Middle East, Africa, Asia, like wherever you are going, this will be covering you for $10 million. And the premium for this one is a very small amount. You can pay $60 for a trip. You will get a $10 million coverage if something happens. Some of these policies will cover also the cancellation of the ticket or losing of your luggages, but most of the companies only cover the medical emergency. Someone asked about which is better, to buy it from Canada or from outside Canada. My recommendation, to buy it from Canada. You have the company, you have their office, you can talk to them. You will not pay anything if something happens. You will just go to the clinic or the emergency with your policy number, and you will not pay anything. The insurance company will pay directly to the clinic or to the hospital. there is like a direct link, you will not pay anything. The second one is medical benefits that will cover the health benefits that is not covered by the Alberta Health Services, dentist, optometrist. If you need the glasses or you need an eye check, you will not pay for it. The insurance will pay for it. For the medication here is it's very expensive actually, and the dentist is very expensive in Canada here. So if you have this type of insurance, you will just pay the premium and the insurance company will pay for everything else. And the last one is a business insurance. If you have a business, you have a corporation, like any type of business. If you have a corporation, you have a restaurant, you have a clinic, a pharmacy, a dental office, like if you have any shop, you have some employers, you can have this insurance to cover all of them. You can buy insurance as the owner of the business. You can buy insurance and use the life of someone working with you as an insured. That means I have the business, I'm the owner, I have the manager. The manager is taking care of everything. He knows every inch in the business. If something happened to him, I will not be able to manage it. I will not control everything. So I can buy an insurance policy. I'm the owner, the manager or the person who is working for me is the insured. If something happened to them, the corporation or the business will be the beneficiary and will get the money to deal with the problem if something happened to that person. Okay, that's it for today.
Thank you so much, Dr. Hani, for that comprehensive summary for what we mentioned today. I would like to thank everyone who came and attended our session here on Zoom and asked questions. And also, I would like to thank our viewers on Facebook. Our next session will be on October 29th at 7 p.m. Calgary time. Or it will be 9 p.m. Ontario time or Toronto time. So please stay tuned and mark your calendars for next session. It will be about property insurance, and it is another very important session, and it will be the last on our series about insurance with Dr. Hani. Thank you for everyone, and have a good night.
Thank you everyone. Good night. Bye.